Good morning, good morning, good morning. Welcome back, everyone. Today we are going to start off a video with a new requested coin, AITECH. Here's the weekly chart. Obviously, this thing is just ripping and people are extremely excited. Congratulations on this easy money as long as it's on an uptrend. Notice that you got a little bit of a wick rejection here. You have 5 more days for the weekly close, and you're in the bullish control, starting to show a little bit of bearish divergence. So that's a little bit of a warning. I did draw fibs. I will show you that in a second. Let's go to daily time frame. Let's do naked analysis first, and then we'll go look at other stuff. So daily is in a bullish control zone. We should be looking for a nice high today, which we kind of already got in a rejection. Depending on the daily close, if we can close above 30 cents, I would be looking for this wick to get tested into the end of the week. You do have bearish divergence starting as in like every day that you're not making a new high, the top is basically being set. Okay. So here are the fibs that I have actually drawn out from the bottom consolidation to the target. We have actually are finding resistance right at the target where we expect. Now, if we are to, like I said, continually have those nice bullish closes, this would be a nice bullish opportunity to accumulate and then actually get back into the distribution 3 red line area before you get another test and then probably continuation again. Okay. This is only possible if we continually close bullish. It's going to have a nice sharp pullback eventually, but you don't want to lose that 30 cent mark I said. Worst case scenario, 27.50. If you start actually getting under 27.50, this is the MIDAR air that I probably won't be touching, but I will be waiting patiently for a long scalp opportunity off of the 20 cent area. And then we can long scalp that with a stop loss under 15 cents and then take it back to the 27 cent, take profit and see if we can break it from there. So the point, it's very healthy and continuing upside. As long as it's above 30 cents, I'd be looking for it to test back into 37 cents. If you start seeing open and closes underneath 30 cents, be aware that 27.50 is your support. Once you have 4 hour or hourly underneath 27.50, you know that you're coming into this MIDAR air, meaning fast move up, fast move down is possible. I'm not going to play with it in this, but I will be waiting patiently for it around 20 cents. Around 20 cents to 15 cents, low 14 cents, I will manage my risk in this accumulation. And then on this rounding bottom accumulation, if I can get it, I will long it on the retest and ride it back up to 27 and whatnot from there. So that's how I would assume trading this if I was going to trade it. Full disclosure, I do not have any of this coin, and I will, I guess, wait for it when it comes back. This is just one thing I'm doing for a friend who's already up like, I think he said 100x. I think he made 100x on this already, so 1000%. So congrats to him. He's gonna buy us all lunch, right, Ty? Aside from AI tech, let's go take a peek real quick at whatever just pokes out at us, and I'll try to bring it to our attention. I'm gonna go to a weekly time frame, turn off all my little doodles, and we could even turn off the indicator, keep it clean. So, what do we see? Right now, okay, so yesterday, you guys are obviously not aware, but yesterday I was pointing out that we had about $1,000 premium on CME to futures. So that was giving me confidence that the drag to the upside was possible and occurring. Now that that as basically at parity, we need to see today, are we going to put in some sort of weakness? And if so, you should all be cautious of a downside that is possible. For example, let's use Ripple. So I guess Ripple will be the last thing we look at on this chart. So Ripple got a nice pop-up yesterday. And everyone, of course, gets excited when those things happen. And you can see that this was consolidating on the 52 to 57 cent area for a very long time. I've been calling for 80 some cents and then $1.15. I'm going to turn on all the drawings. Actually, no, I'm not going to turn them on. I'm going to leave that for the members. So as we are getting this upside push right now, we need to see, hey, can this actually close this week above 72 cents? If we can, great. Otherwise, if you close underneath this 72 cent this week, you're going to be putting in a third lower high. And the grind on this head and shoulder, possibly, like shoulder, shoulder, head, shoulder, second shoulder, and a sweep to the downside is possible. Like this, kind of doing the same thing over and over here. So it's like uh, not the prettiest chart and not the most confidence inducing for upside, but just be aware that this is a possibility of a sharp move back down if you don't close above 72, which is like very, very close, and you have 5 days. If we close above 72, I will naturally go to our next target, which was I think like 82 to 88 cents. And then once you get above 88, 82 cents, the next natural target is that $1.15 area that I've been, go back to the old Ripple video, all of it's on there. But that's how I would be going level by level, because this coin has been going to a level of resistance, slap back down, tests it, confirms support, goes back to resistance, slap back down, higher lows on support, grind, 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 finally breaks resistance after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 attempts. Okay, holy poops. And that was like a year or two of effort. So now this consolidation was a much more volatile in the up and down, but the situation is that it's holding support above the previous levels, right? So this is a sign of strength, in my opinion. Now you're actually encroaching above the top, which is a good attempt, but you don't want us to have a swing failure pattern here where you tap that liquidity, have a quick rejection right back down the next week. That's what we want to avoid. We want to see continuation up and stay up. And the only way I will be more confident with that is a weekly close above 72 this week. And then I'll be looking for that 82 cent next week. And that's about a almost like 15-20% pop. Okay. So in spot, so you don't even need leverage if you want to trade this. Okay. Just be very, very cautious, be very, very careful. That's basically the gist I was gonna say is like I like how Ripple is popping off, but when Ripple pops off, that means everything else is putting in a local top. That's exactly what I was saying yesterday about Dixie. Dixie looks like it is basically confirming a bottom, a local low. And if Dixie is putting in that local low, then that means Bitcoin and ETH are putting in local tops. I did short yesterday at 406. I shorted like 4 times yesterday. 490, 460, 450, 430. I'm still short. I did it over and over and over. And I did short 72,700. And then I shorted 73,000. And I collected both of them at 72.5 and 72.3. So, and then 72.1 was the TP of that whole range we were shorting. So we are basically just consolidating sideways, and we're going to be scalping longs and shorts in that sideways consolidation until we break the range. More than likely, a local top is setting if Dixie is putting in a local bottom. So I'm going to hold my shorts more than I will my long as an insurance policy to protect all the other spot shit that I bought. So if we go to the downside, I'm going to let Bitcoin and ETH subsidize all the alts that I bought that are going to get tanked hard. For example, I will give you a quick example of KUJI. Okay. KUJI did not move a lot this entire run. I was kind of disappointed in that one as well as a few others. But let me show you why I'm kind of concerned about downside to come for other coins, such as Ripple. So here is KUJI on a weekly, and you can see on a weekly time frame, this is looking like putting in a distribution top. And my risk right now is that, hey, if we lose 375, a flash to 340 and then even a nastier flash to 230 is possible. So I'm aware right now that, hey, this thing, let me turn on my, is putting in a big bearish divergence, and the bearish divergence can flush all the way to 340 with no